Good morning, everyone. It's a true pleasure to be here in Frankfurt, in the heart of European supervision, in this special event of the Spanish banking sector. So today we are going to focus on the strength of the Spanish banking sector. Really, there's a lot of things to be proud about our banks. Our sector has shown huge resilience, huge dynamism, granting credit to households, to companies during, remember the pandemic, but also in extreme climate episodes like Dana. And really, we are a specific factor that explains the success of the Spanish economy, which is growing in the highest growth rate among the industrialized economy. Today's event is an opportunity to showcase the strength and resilience of our business model, also to explain the deep and structural transformation that our sector has carried out, embracing innovation and efficiency, and of course also always maintaining a strong commitment with society. The outline of our presentation would be, first, I would cover the overall picture of what has changed over the past 15 years in the Spanish banking sector. Then I will deep dive a little bit on our risk profile with explaining key performance indicators and financial variables. And finally, my colleague Luis Tejero will explain and present non-financial trends and also this huge contribution that our sector gives to society, because this should be known. And we need to communicate and to explain. Maybe for this audience is a little bit obvious, but really our sector is a fundamental factor for economic and social progress. So maybe I'm going to stand up just to explain my presentation. If we can start, with the first slide. So what has changed over the past 15 years? I would say that the great financial crisis is a turning point on regulation, supervision, which culminates with the creation of the banking union. And of course, the single supervisory mechanism has been fundamental in the transformation of the Spanish banking sector. But really, the transformation in the Spanish banking sector began a little bit earlier, 4 or 5 years earlier. And what has really changed? Well, it's true that we all remember those difficult times, stress in the Spanish economy and also the financial sector. But really, since then, the story of the Spanish banking sector is one of success. What has changed is a significant restructuring process. So today we have 150 entities operating in Spain, out of which 10 are significant institutions that somehow gathers 55 entities that used to operate in 2008. So the restructuring has been quite remarkable. And those 10 significant institutions account for 90% of assets under direct supervision of the SSM, which is the second largest share under direct supervision. Then it's true that we have an enhanced governance framework, especially, for those entities that used to have weaker governance or political interference in their boards, or even lack of access to market. Those entities are no longer here. We have enhanced the risk management procedures also through supervisory tools like risk appetite framework, ICAP, ILAP recovery plans, also the generalized use of the 3 lines of defense that has enhanced the risk culture across the whole organization. So this is another important change. We have gone through an optimization of the installed capacity in the Spanish banking sector, also driven by a big bet on investment for digitalization. This has led to best-in-class ratios in efficiency, with, of course, important increase in productivity. And I would say that despite the important reduction of branches, Spain still has the second largest network of branches per habitant. Finally, we have a stronger capital base that has contributed to resilience, to profitability, and also to higher credit management. So, very quickly, of course, this transformation has reflected in improved KPIs. Return on equity stands now at 15%. NPL ratios has substantially declined from 7 to 2.6. And capital and liquidity ratios are comfortably above management buffer and requirements, reflecting huge resilience and fully alignment with our risk profile and business model. So what makes our business model different? So maybe I would highlight two main features. One is retail activity, and second is diversification, both in terms of activity and also geographical footprint. So the Spanish banking sector has a predominantly retail business model. We can very oriented to household. We can see in the chart that 31% of our balance sheets are loans to household, and that 37% of the balance sheets are deposits from households. And these, that's really figures that are well above our SSM peers. And this has also an impact on the revenue side. The Spanish banking sector has a very stable source of revenues. Indeed, the operating income is primarily composed by very typical retail activity. So we can see that this retail core activity, net interest income and fees accounts for more than 96% of the operating income, which is more stable than other business model that relies on more volatile source of funding. But also another important element is that the P&L of the Spanish banking sector is stable throughout the whole economic cycle. And I think that that's a good chart, taking the results of the latest EBA stress test results, we can analyze how the P&L contributes by generating positive results under the adverse scenario. And we can see a huge correlation between the contribution of the P&L in adverse scenario and the lower capital depletion. So this means that, and Spain really is doing very well here, and reflects that has a strong resilience once the crisis or difficult moment materialize. So next, of course, this business model also has resulted in stronger profitable metrics. It's true that return on equity has steadily increased from 10% to 15%. So after many years of pressure on profitability, and also for the first time is return on equity is above the cost of equity. That's very important to be attractive for the investor. I would also highlight that, profitability and in general the business model is coping well with also the easing of the monetary policy that started by mid-24, when the ECB started to cut interest rates because of different levers. I mean, we have management of net interest income, but also diversification of revenues and prudent risk management. And finally, we can see here this cost to income and the efficiency of the Spanish banking sector really is one of the best across the European banking sector, with 43%, well below our peers. And this is the result really of embracing innovation, digitalization, gains in productivity. Of course, it's true that we have gone through a reduction in the number of branches, but really opting for an omni-channel approach. Well, we also make sure that we have physical customer service when needed, and really, as I said before, despite this closing in the number of branches, we still have the second largest network of branches. An important element is the improvement in asset quality. We have seen in the Spanish banking sector a cleanup process in our balance sheet. Is quite remarkable that the NPL has substantially declined from 7 to 2.6%. It's true that we are still slightly above our European peers, which has 1.9%, but this gap is narrowing. And also, the Spanish banking sector is proving a very conservative and prudent risk management with higher coverage of non-performing exposure across all stages. And maybe finally, I would go in the next slide. Yes. The point more important in my presentation. I want to talk about capital. Let's focus on solvency. So it's true that the Spanish banking solvency is robust and is fully aligned with our business model with a risk profile. The performance and the development of Common Equity Tier 1 in the Spanish banking sector last year is very good. It has increased by 40 basis points. So it stands now at 13.2%. Capital has always been very important for the SSM. Supervision has always been very capital-centric. And it's true that the Spanish banks have lower capital ratio than our SSM peers. That's true. But my point here, and I would like to explain that if we focus only on common equity tier 1, we cannot have the whole story. We cannot have the whole picture. And it's insufficient to fully understand the resilience, the solvency of a bank, of a sector. So this is why we consider, on the one hand, not all the risks are covered now with capital because there are emerging risks that needs more qualitative measures. But also, I mean, there are other metrics that are equally important to fully understand that solvency. One is the distance to MDA threshold, and second is how P&L and how capital behaves under severe scenario, under adverse scenario, especially if we take into account that capital is deemed to cover unexpected losses where crises materialize. So if we take into consideration the distance to MDA threshold, as Spanish banking sector has lowest MDA threshold because of our business model, because we have less intensive use of internal models. We narrow that capital gap with our peers from 300 basis points to 130 basis points. If we also take into account how capital behaves under adverse scenarios, well, we can see that the Spanish banking sector has one of the lowest capital depletion, 186 basis points, vis-à-vis 370 basis points on SSM average. So this would mean that the distance to MDA after the adverse scenario would be 105 basis points, which turn that gap on capital positive on 40 basis points. Well, that is to say that really the solvency and the capital ratio of the Spanish banking sector reflects resilience, strength, and is fully aligned with our risk profile. And just to wrap up, I would like just to review what we have seen is that the Spanish banking sector has gone through a deep transformation with an important restructuring process cleanup in our balance sheet. Also, stronger capital base, resilient, and very important, structural transformation in terms of efficiency and digitalization that I'm sure that Luis Tejera will explain very well. So thank you very much.
Thank you, Maria. Thank you, everyone, for being here. As Maria was saying, I think the figures are quite clear, and the improvement in the Spanish banking sector in the past few years is quite remarkable. And as she said, I want to focus now on non-financial indicators and some trends we see that are currently shaping the Spanish banking sector. The first one, of course, is digitalization. Digitalization, this is not specific to the Spanish banking sector, of course. This is something that is across the board in all entities. But I think in Spain is working quite well. Of course, we can see digitalization as a incentive to face the competitive threat of big tech, fintech, and so on. But I think it's much more than that. I think since the financial crisis, digitalization has been one of the measures used by the financial system to improve efficiency, to improve how we operate, and is working quite well because our customers are responding very well to this trend. As you can see there, about 70% of adoption rate on digital banking in Spain, which is above the EU average. And we expect, according to our think tank Funcas, we expect that by 2027, about 85% of digital banking usage. And what is more, we expect that 3 out of 4 contracts will be made by digital means. So I think this is working very well. We are now facing what we can call a second wave of digitalization with the emergence of AI. Of course, AI promises to improve personalization, security, operational efficiency, but later on we'll see that it also poses some risk, of course. And I'd like to finish this first trend, talking about what we consider a success story in Spain, which is Bizum. Bizum is our instant payment solution. It's based on a joint effort of all the Spanish banking system, fostered by all the 3 banking associations, with the support of Banca of Spain and all the entities. And as you can see with these figures, is quite remarkable that in only 8-9 years, we already have almost 30 million users in P2P operations. And e-commerce is also progressing very well, with over 100,000 shops already allowing payments using Bizum. So it's really a success story. And now we are in a new phase where we are also internationalizing the solution and making our alliances across Europe, because the final objective of all the EU financial sector is that instant payments become a common tool to payments in all the European Union. Of course, with digitalization, which is very positive as a trend, has also some concerns for the financial system that we are addressing. One of them, of course, is cybersecurity. Cybersecurity is for all entities is quite a concern, which has been growing quite rapidly in the past few years. And in cybersecurity, one specific concern is bank fraud. Bank fraud is a specific concern because it involves third parties, which are the customers. In this case, we are referring to a recent study by Biocatch, where we can see that in 58% of the fraud cases, it is the user which authorizes the transaction through the deception. Okay, social engineering is gaining relevance, is becoming more important, because criminals do not need anymore to breach the financial system cybersecurity systems, because they simply have to persuade the customers to authorize payments. And in this, I was referring to AI. AI has very positive applications, but also have some negative ones, and one of them is enable criminals to further manipulate victims using more sophisticated tools. So what we are proposing here, of course, on the regulatory side, we are working with the authorities in trying to establish cross-sectoral fraud prevention measures. What we feel is that here there are a lot of parties involved. We have the financial system, but you also have the telecom companies, you have online platforms, and we have to work together if we want to prevent bank fraud in an efficient way. And of course, gross negligence, as is already being contemplated in the upcoming PS3 and PSR regulation, has to be also part of the equation. And we cannot forget the social side. I'll refer to it later also, because we believe that financial education is key here. If we want to prevent bank fraud, we have to enable our customers with the tools to identify these scams and try to and be prepared to prevent them directly. So this is the first trend. A second trend that is also common to all EU institutions is sustainability. I'm not going to go into all the details. I think we are already a little behind schedule, but as you can see, in the past 10 years, sustainability has become a driving force for the Spanish financial system. And you can see that already 65 issues of sustainability-linked bonds, over 40 billion issues in green social and sustainability bonds, almost 40 billion in sustainability-linked wholesale loans, only in 2023. And in the case of investment funds and pension funds, we have already quite a significant share of funds aligned with sustainability criteria. So I think these are two of the main driving forces now shaping the Spanish financial system. And I'm going to move to what Maria was referring before, which is the contribution to society. And some of this is not very well known. Other parts are slightly controversial. I'm starting with the tax regime because, as you may know, in the past few years, we have some discussion in Spain because we have a new windfall profit tax, specifically applied to the banking sector, and behind this tax, what underlied was the perception that the banking system was not contributing enough to the tax administration. But the figures are telling us the opposite. As you can see, in 2023, almost 10 billion euros was directly contributed by the banking sector in Spain. This means that for every 100 euros of profit, 43 are allocated to paying taxes. I think that's quite a high figure. And what is more, 47% of this amount is linked to taxes that are specific to the Spanish financial sector. They are not general taxes applicable to all businesses, but specific to the Spanish banking sector. We have a deposit tax, we have non-deductible VAT, we have increased corporate income taxes, we have a mortgage tax, etc., etc. So this is one of the first issues where the contribution to society, I think, is quite clear. Another, which is even less common, is the collaboration with public administrations. I say that without the banking sector, many of the public services will not be operating as they are today. And I have also here some figures. You can see about 1 billion European billion operations with public administration only in 2023, amounting to 750,000 million euros, which is more or less half of Spanish GDP. What are these operations? This is tax collections on behalf of the tax administration. These are embargoes of accounts on behalf of the justice administration, payment of pensions, payment of unemployment subsidies, even working with our customers to help them fill in the taxes. Okay, so. What are we doing here? Because this model is not profitable for the banking sector. We're trying to improve it by automating all these processes in order to make it more efficient. Because only 2% of the operation are manual, but they account for 40% of the total cost of these operations. And finally, I want to refer to other contributions to society, which are in the first one is quite clear, is talent. We contribute to 9% of the banking employment in the Eurozone is in Spain. We're talking about 163,000 people. This is quality employment, and if we refer to gender equality, of course, we are complying with all international standards. Over 50% of the workforce is female, and in the case of the governing bodies, it complies also with 40% in the case of listed companies. Then we have the contribution to specific sectors. Okay, we are in the past few years. What we saw is that this digitalization, in the case of seniors and in the case of rural areas, had some drawbacks. And we wanted to leave no one behind. So what we did was specific protocols to address the necessities of senior customers and people living in rural areas. And you can see here some figures, okay? What we did, for instance, for the seniors is extending the branch schedules, assigning specific advisors for senior people in the branches, and ensuring that if they call to make some kind of inquiry, they are attended by the person and not by a bot, for instance. Okay, and you have here some figures of the beneficiaries in this area. And also in the case of rural areas, as you know, in Spain, the population is very concentrated in big cities and in the coast, but we have several areas with very small villages where the access to cash is sometimes difficult. And here we are also working on a roadmap trying to reduce the amount of population that has not direct access to cash in the municipalities. Okay, so as you can see in the years between 2021 and 24, we reduced it by half the amount of population that is in this situation, and we continue working on this trend. And I want to finish with financial literacy. Financial literacy, I was referring to it before when talking about bank fraud. I think it's very, very important. Both AEB and CECA has been working with the authorities in Spain for many years now, trying to improve financial literacy, and we will continue doing so. We are devoting a lot of effort and funds to this end, because we feel it is one of our responsibilities to have better form customers, and also this is going to help us in reducing bank fraud, as I was referring before. In fact, in all these programs that we're dedicating to financial literacy and financial education, there are specific ones that are dedicated to fighting against cyber fraud. So this is it. I mean, we try to give you an overview of how the Spanish banking sector has been doing in the past few years, covering both the financials and the non-financial contribution. And I think it gives a positive outcome of what we have done in the past few years. So thank you very much.